Hello everyone and welcome to another midweek technical outlook here at xm.com. Today we will be looking at the US100 index, which is currently extending a tech-led rebound on easing AI disruption concerns. We will also be looking at oil, which has also jumped over 6% on potential supply disruptions amid geopolitical concerns. And also we will be looking at Bitcoin, which is extending its consolidation into negative territory. Now let's start with the US100 index, which is extending a 3-day rebound from the 24,440 level, which is a 23.6 Fibonacci retracement level of the pullback from the record high in October to the November 21st low. Now, a break above, should this rebound resume and break above the key 25,000 psychological mark, which intersects with the long-term uptrend line, then it could target resistance near the 20-day and 50-day SMA in the 25,329 area before it moves into record territory near the 25,737 level. Now, to the downside, immediate support might come from the 24,700 level, which is a 38.2% Fibonacci retracement level, and also below the 24,440 level, which triggered this rebound. It was last touched on February 17th. Now, further below, a key support level lies just near the 200-day SMA, near the 24,000 key psychological mark, which was last touched on the 21st of November. A break below this level might shift the outlook to a more negative one. Now, the momentum indicators are still reflecting a neutral stance. The RSI still flatlining just below the 50 neutral threshold, and the MACD is overextended to the downside, still below zero and its red signal line, so it's yet to confirm that the upside. So it might suggest that the bullish momentum remains weak. Now let's look at oil. Oil has extended, has jumped over 6% in the last two sessions. It's eyeing strong resistance near the 4-month high, near 66.64, which was last touched in September. Now a break above this level could reclaim the 68.45 level, which is marked by August highs, before it targets the key 71.40 level, which is marked by the July highs and triggered this pullback from which oil has yet to recover. That said, the bullish bias remains intact as it has recovered over 61.8% of this pullback, and the price action is well above all key SMAs. There is also a bullish crossover between the 20 and 200-day SMA, and also the positive bias is confirmed by the momentum indicators, with the MACD overextended to the upside above zero. It is marginally below the signal line, warranting some caution. The RSI is also well above the 50 neutral level and just below the 70 overbought territory. Now, in the event of a pullback, immediate support might come from the 20-day SMA just above the 63.35 level, followed by the 200-day SMA, which hovers just above the 62.30 support level, which is strong support, capping losses since late January. Now let's also look at Bitcoin. Bitcoin is extending its consolidation in negative territory. It is currently hovering near the lower boundary of this range, tight range floor, within which it has been trading for this last month. So it should resume to the downside and break below this the key 65,400 level, and immediate support might come from the 63,000 level before it retests this key psychological 60,000 mark, which is a 15-month low and was last touched on February 6th. Now, to the upside, a break above the key 20-day SMA near the 70,300 level might then target the 74,471 level, which is the 38.2% Fibonacci retracement level of this pullback from the January highs to the February 6th swing low. and a break above this key resistance could then target higher levels near the 80,615 level. Now, the bearish bias is confirmed by the momentum indicators. The MACD is overextended to the downside above the red signal line, suggesting that there is confirming its upside attempts. However, the RSI is firmly bearish. It's flatlining above the oversold threshold, so the bearish bias is broadly intact in the long term and the short term for Bitcoin. Now that's all for today's market wrap. Thank you for watching.